Well, good morning, sales team optimization oracles. Welcome back again this month to www.salessystem.com.au. My name's Glenn Guilfoyle and I head up the specialist group called The Next Level, and we produce these monthly bulletin come videos as a sign of our entrenched commitment to the noble cause of sales team optimization, the science of creating a sales system in which the sales team operates in an optimized environment, because the ruler has been run over the sales team design, the sales process design, the mathematical classification of the customer base and the prospect pool, all in the name of and creating the system to drive optimum productivity and maximum return on investment. And so that's a nice segue to my topic for this month. I would like to talk to you or analogize sales team optimization with managing your sales team like an asset and putting to you the rhetorical question: what is your return on investment of your mobilized sales team? You know, the business brokers tell us that due to the ever-increasing homogeneity of markets and players within mature business-to-business Australian markets, and the associated commoditisation of the products and services of those companies and markets, we're seeing an ever-progressive downward spiral of the value of organisations playing in these spaces. An expectation of achieving a sales price multiple in the range of, say, 5 to 10 to 1, say a decade or two ago, is almost pie in the sky for many of us now. And we're seeing value ratios fall to 2 to 1 and even 1 to 1. But hang on a minute, I'm reaching out to you with this message as B2B sales organisation leaders. So what's the connection then with the value of the value multiple of a sales organisation? Let me try to answer it this way. How many of you manage your sales team like an asset? Think about it. Can you definitively answer these questions? How does your current sales team productivity compare to peers and even competitors? How much could you increase that productivity by? How would you do that? And how much return would that generate if you could? When one starts to run the ruler over a B2B sales team in this way, as if you are managing an asset to yield a return on the investment, we often see in, again, those sort of classic, mature business-to-business, commoditizing type markets, a ratio of anywhere between 5 to 15 to 1. But what exactly does that mean? Well, it should mean that for every dollar to recruit, train, pay, incentivate, and fully mobilise each member of the team, there should be a return on that investment at the margin level from the revenue that that team is charged with the responsibility of taking care of anywhere between 5 to 15 margin to $1 cost or investment. Okay, so what? Yes, you're right. That's not really a true translation of the normal concept we apply to the valuation ratio when we're looking at the value of an organisation. But bear with me. What if you took that unique ratio or calculated it first and then took that unique ratio for your sales organisation as a benchmark for the improvement of the productivity of the sales team in question? After all, leading sales organisations run the ruler over the sales team in this way every year as an integral part of whole of company budgeting. So having calculated the as-is ratio, as it currently is, your current reality, then you can move to calculating the to-be ratio or the could-be ratio, which would then be calculated on the incremental margin from incremental revenue produced when taken purely and solely as a result of the increase of the sales team productivity. Taken against the increase in costs at two levels. One, the cost, any increase in the cost to fully mobilise and run the sales team, including equipping them appropriately. So any increases there. And two, the actual costs of running the sales team optimisation exercise. But that's easier said than done, going from an as-is calculation to a to-be calculation. What about all the stuff in between the calculation that you need to consider, analyse and calculate in order to get to your to-be improved ratio against your current reality as-is ratio? If you click on the link in the Word version of this document, or this bulletin, it will take you to our sales team optimization modeler, and you will see those ratios I'm referring to. You will also be introduced to the critical and relevant productivity and economic drivers in between that need to be calculated in order to move to your desired to-be ratio from a baseline of your as-is. So come back again next month and we'll delve into those economy and productivity drivers in between. In the meantime, as always, we're only a phone call away. You can access us via the Word version of this bulletin on the website, and I hope that that's given you some food for thought for taking your sales team optimization and the way you think about it as an asset and managing a yield on that asset to the next level. Bye for now.